Good morning and welcome to Elearnmarkets. As we all know that E-NCCMP is a course where you would be getting a complete knowledge about the financial markets, which would be covering topics like equities, derivatives, currencies, commodities, and these are all different aspects of the financial markets. You all have must gone through a few videos and the PPTs which has been shared. If you guys have any doubts or anything, you all can share it. I'll be here to clear all your doubts. Yes, Vishal. Vishal is asking that how do we calculate the present value of annuity? To understand it, yes. So basically there is a doubt here that what do we mean by present value of annuity and how do we calculate it? Now first we need to understand what is an annuity. An annuity is basically a cash flow which you are receiving at regular intervals, at regular time frames, right? So when we talk of present value of an annuity, we are trying to calculate the present value of money today of the cash flows which we would be getting at regular intervals over a period of time. Say for example, if we are getting 1,000 rupees every month, we are supposed to get 1,000 rupees every month for a period of 5 years. So basically we would be getting 60 times 1,000 rupees for the next 5 years. What is the present value of that? That is required to be calculated through the present value of annuity. If we talk about car loans, EMI options, they are all examples of the present value of annuity. Vishal, am I clear? Please type in a yes or a no in case. Okay, thank you.
Yes, I got it now. Thank you very much.
Thank you. Thank you so much. Next, can we just discuss a little bit about what the markets have been this week, since you all must have started tracking the markets now. So do you know what is happening in the Indian stock markets or in the global markets as well? Let us make it at an interactive session.
How do we interact, on chatting or voice?
Yes, you can chat also. You can just send in your views through chat and then we can discuss it. Like how has the Indian markets or the global markets behaved in the last 1 week?
Yeah, I found China market was quite volatile since last couple of days. We found Indian market.
Yes, the China markets has been very volatile, as well as Indian markets was very volatile with a negative bias. We have seen the markets crack from 85.50 levels to around 83.50 levels, and the key reason for this market fall was, as we all know, was the Greece crisis. Yes. So what do we know about the Greece crisis? Basically, the country failed to reach a deal with its creditors and it defaulted on its massive debt payment. And that repercussions were felt globally in all the European markets as well as Chinese markets, Asian markets. All the global markets was hit because of this news. And the European markets were the biggest market hit due to this news. However, Greece has now requested a third-party bailout package on Wednesday to help to pay its debt, and it would basically try bringing its economy back in shape. So this was all about markets which had happened this particular week.
Just a query, just normal, out of the context. Like,
could you please chat in? Could you please put in your query in through the chat?
I'll try that.
Yes. Meanwhile, do you all have any other queries regarding the financial markets, the primary markets, the IPO process? What do we mean by, yes?
Different part here. Hello.
Yes, please type in your queries. Please type in your queries. Vishal, Vishal is asking why Indian markets is directly affected by Greece, whereas Indian markets is not directly affected by Greece. It is basically the sentiment effects, and because of which we saw a fall. There is no direct effect by the Indian markets. However, there are foreign institutions and the foreign money which keeps on coming in our Indian markets, which gets sentimentally affected because of any country defaulting. I hope I am clear, Vishal. You can type in a yes or a no. Okay, thank you, Vishal. Okay, now do we have any queries regarding the financial markets, the primary markets? What do we okay, Parth is asking me, can you please explain what is active fund management and passive fund management? Yes, Parth. Now, by active fund management and passive fund management, we are talking about mutual funds. First, to start off with, what do we mean by mutual funds? Mutual funds is basically a pool of funds which is collected by different investors and professionally managed. These funds are professionally managed, and they are basically, these professionals manage our funds in different areas of financial market, maybe equities, maybe debt, or other avenues. Now, when we talk of active fund management, we mean that this portfolio is of mutual fund is being constantly monitored by these professional managers. They are constantly tracking the markets and taking positions or exiting positions from their portfolio. However, since they are very much actively involved in this active fund management, the commission also being charged by them in this mutual fund is quite high compared to a passive fund management. Now, in a passive fund management, the fund managers do not actively manage the fund. They say, for example, they simply invest in the Nifty index. However, the way the Nifty is going to perform, the index is going to be performing the same way. So, active change of portfolio doesn't take place when we talk of a passive fund management. And that because of which, since active involvement is not involved, the management fees or the commission also which is being charged by these professionals is comparatively less in passive fund management compared to active fund management. Parth, am I clear? You can type in a yes or a no. Okay, thank you, Parth. Vishal is asking me, does active fund and passive fund differ in return since way of tracking? Yes, the returns of active fund management and passive fund management will obviously differ based on the portfolio which it is having. For example, if an active fund is having gilt portfolio, gilt funds or some money market instruments, compared to a passive fund of Nifty. So the returns will depend on the return which is being generated on that particular financial asset. Vishal, am I clear? Okay, thank you, Vishal. There's another question by Athar who is asking me, could you please explain reverse book building? Yes. Now, reverse book building is basically one of the, we have learned about book building process in the primary market activity. By reverse book building, we mean when the company wants to buy back its shares from the open market, that through a reverse book building process. That means the members are capturing sell orders on online basis from different shareholders through these book running lead managers. There is a particular period in which these bids are accepted. When a company decides to buy back its shares through a reverse book building process, it actually gives out the application forms and the price band in which the company is ready to buy back the shares. In this process, basically the acquirer company offers to buy back from his existing shareholder in the or through the online system, and these offers are basically collected at various prices which is either above or equal to the floor price. Again, after the bidding process has been completed, when the offer, since the offer is open only for a number of days, then the price at which the maximum bids has been collected, at that price the company plans to delist its shares at that particular price. It is basically a voluntary delisting process, and it is similar to the process of the book building, in which the BRLM, that is the book running lead manager, is also appointed for this process, and the costs and everything remains almost the same in a book building and a reverse book building process. Vishal, is it Athar, are you clear about the reverse book building process? Athar, can you please reply by a yes or a no whether you are clear about? Okay, thank you, Athar. So reverse book building process is clear. Now there's the next question. Vishal is asking, for money market passive funds are recommended. I did not get your question, Vishal. Money markets, there are mutual funds basically which are investing in money markets also, and it can choose to actively manage their funds or passively manage their funds. There is nothing called as recommended or not recommended here. It is completely on choice, as the mutual funds or the pool of investors would want to, or rather the people who are managing the mutual fund decides on it. Clear, Vishal? Okay, thank you. Okay, Parth is asking us another question, that is, who are the anchor investors? Or what do we mean by the anchor investors? Now, anchor investors are those investors in which to which basically these, whenever a company goes in through for an IPO or an FPO, the shares are first offered to this class of investors who are known as the anchor investors before going to the public. So a company, these anchor investors are basically from the QIB quota, which is the quantitative institutional buying quota, and a company can have a maximum of say 30% of QIB quota. Out of this 30%, the anchor investors are chosen, and to these people basically before going to the public, this investment is offered. They can choose or not to choose to invest in that particular investment. And also, one criteria which these anchor investors have to follow is that the minimum lock-in period for their investment have to be 1 month. So they can't just exit immediately after listing of an IPO. They have to keep the investment for at least 1 month before they can exit the particular investment. Are you clear what do I mean by anchor? Parth, are you clear about anchor investors? Okay, thank you, Parth. Okay, we have another question. What sentiment, Vishal is asking us, what sentiment does reverse book building shows in the market? Normally, it is a positive sentiment which builds up when a reverse book building. It is not about reverse book building. It is basically when a company is buybacking the share. That is basically creating the sentiment in the market. Okay. And it is normally a positive sentiment which is created in the market when a company is announcing buyback. However, the buyback price has to be seen to actually justify whether it is a good news for the company or not a very positive news for the company. Vishal, am I clear?